Ultimately, the chief aim of investing in private equity is to generate a higher return than you would investing in the public markets. That's the crux of the argument, and the idea is that you invest in opportunities that do involve some more risk, and you are giving up some liquidity to generate those returns. But the opportunity set is enormous with the amount of unlisted opportunities out there and people looking for capital to take their corporates to the next stage. The challenges certainly are around liquidity. Being able and comfortable to lock money up for periods of 10 years is certainly something you have to get comfortable with when you're investing in private equity. Sometimes the fees are a point of discussion for clients. They're not always comfortable paying the fees that private equity firms can charge. And there's this concept of a blind pool. So you commit your money today. Hopefully your manager's carved out an area that you're comfortable with investing in, but you still are reliant on that private equity manager finding those opportunities in the space and being able to invest and turn around or harvest those opportunities into something that becomes profitable. Private equity, I think, will always have a place in the investment world. There's going to be opportunities for small venture companies looking to raise capital the first time to take their corporate to the next level. There may be more of these very large corporates and tech-focused groups that don't need the amount of capital that public markets can supply them, and so they may stay private for longer. But it does appear that there'll always be an opportunity set for private equity investors. One of the key things when focusing on private equity opportunities is to partner with as high a quality manager as you can. Those that are regarded as top quartile managers have a consistency of outperforming, generating very strong returns, and so being able to access those managers can be key to generating good long-term returns from private equity. We talk about allocating a 5% component to private equity. We have many clients who are comfortable to go beyond that 5%, and that can be because they're seeking those higher returns and comfortable with the illiquidity that private equity offers. For what we find globally is that Australian clients are relatively comfortable with private equity compared to many of our counterparts. And I think part of that can be explained by the development of the superannuation system here in Australia, where institutional style investing is something that they're more akin to and understand. And so with that, you end up with comfort into the illiquid asset classes. Importantly, a lot of Australian clients already have a lot of exposure domestically, so it is looking for those international investment opportunities in private equity that really does have appeal to our client base.